Assalamualaikum and hi, my name is Nurul Nadia Binti Hassan. Today I would like to present about the impact of COVID-19 to the Central Bank of Malaysia. First, we go to the introduction. Bank Negara Malaysia is a statutory agency that began operations on January 26, 1959. The Central Bank of Malaysia Act 2009 governs Bank Negara Malaysia. Bank Negara Malaysia's role is to promote monetary and financial stability. This is done to provide a favorable climate for Malaysia's economy to thrive sustainability. Wuhan City, China, witnessed the genesis of the novel coronavirus in December 2019, and it has since spread globally. Financial markets around the world have been particularly stressed and volatile as a result of the COVID-19 outbreak and related shutdowns. Despite this, the banking industry has played an important role in assisting people and companies and effectively channeling credit into the larger economy during the COVID-19 pandemic. Next, we go to the issues faced by the Central Bank of Malaysia during COVID-19. The bank had operational problems in ensuring the public had accessible and easy access to cash throughout the year due to the substantial rise in demand for cash during the MCO. At the same time, because of the public was holding more cash, they received 23% fewer deposits from financial institutions over the year. This means that there were fewer of it banknotes available for issuance into circulation. Second, in general, a drop in aggregate demand amid increased uncertainty and income insecurity may serve to moderate inflationary pressures. Higher manufacturing costs, however, could contribute to cost-push inflationary pressures due to supply chain disruptions and the impact of physical separation and cross-border mobility restrictions on labor supply. The initial lockdown at the start of the epidemic has resulted in a shift in demand patterns, which, if persistent, could translate into changes in the degree of market power firms can exercise, altering equilibrium inflation. Third, the Central Bank of Malaysia is approaching these problems from a strong position with surplus capital buffers exceeding the minimum regulatory requirement of 119.7 billion as the end of January 2020. The bank has assessed its planned regulatory and supervisory operations in 2020 to lessen compliance and operational costs on banking institutions in order to enable them to service their customers and proactively manage risks resulting from current developments. Policy and supervisory measures will be refocused as part of this review on monitoring and responding to risk developments, as well as ensuring that banking institutions continue to be a source of strength for the Malaysian economy. Next, we move to the steps to curb the effects of COVID-19 to the PNM. As a result, in order to accommodate the increasing demand for cash, the Central Bank of Malaysia implemented three action plans. First, they used their buffer, which is extra currency stock that they store aside from typical usage. The buffer stock is intended to ensure that there is enough cash to cover growing public demand in the event of unforeseen situations. Having a significant buffer was critical to the bank in ensuring no financial shortage throughout 2020 during the pandemic. Second, the Central Bank of Malaysia worked closely with the bank's cash industry strategic partners, particularly financial institutions and cash in transit business, to ensure that cash was always available at more than 12,000 automated teller machines (ATMs) around the country. Third, to maintain business continuity and minimal delays to the account and BNM activities, the bank implemented split operations and backup teams. In the case of a virus outbreak among employees, the afflicted area was strictly sanitized with backup teams taking over operations. Compliance with health and safety SOPs was always a priority, especially when it came to rigorous physical distance and personnel hygiene. The Central Bank of Malaysia is granting 3.3 billion in financial facilities under Bank Negara Malaysia's Fund for SMEs to support SMEs in sustaining business operations, safeguarding jobs, and encouraging domestic investment to help business and households affected by the COVID-19 epidemic. Interested SMEs can take use of the following three financial options, which are 2 billion special relief facility has been established to assist SMEs affected by the COVID-19 outbreak with their short-term cash flow concerns. Lastly, we go to the impact of moratoriums. To mitigate the impact of the MCO on ordinary Malaysians, the Malaysian Central Bank directed banks to place a 6-month blanket moratorium on all bank loans except credit card balance. Loan moratoriums, on the other hand, can represent significant risk to banking institutions, necessitating good risk management due to the chance that they could eventually become non-performing loans. According to the Malaysia's financial minister, the PNM is expected to lose 6.4 billion during the life of the loan moratorium, which equates to around 1.06 billion in monthly losses based on Malaysian Financial Reporting Standards (MFRS 9). According to the Minister of Finance, there is also an 79 billion modification loss as a result of the 6-month blanket ban period. In addition, modification loss indicates that banks have less capacity to make new loans to firms and individuals. This is supported by a report from Malaysia's Central Bank, which revealed a drop in earnings from domestic banking events in 2020's first and second quarters. Moreover, banks will also not be able to pay dividends to their retail investors and institutional funds that hold public savings such as EPF, QWAP, Kumpulan Wang Simpanan Persalahan Diperpadankan, PNB, Permodalan Nasional Berhad, LTAT, Lembaga Tabung Angkatan Tentera and Tabung Haji, and this will result in a lower return to depositors and retirement savings. I think that's all from me. Thank you.